Good evening, everyone. This is George from Getting Market Money with today's Currency Corner, Wednesday, August 18th. We'll start off with a little equity overview. Today, the markets were pretty stagnant, no drastic moves in comparison to the past 2 weeks. However, past price action has suggested a bearish trend. We are bearish. I myself am bearish, and I wouldn't dare enter the market for a long in equities at this point. I need a little more convincing than today's pathetic less than half percentage point rally. It is like a single breath of fresh air in a volcanic dust cloud. So it's not that big of a deal. To me, this day is pretty much a write-off. Some of the news, crude oil inventories came out today close to expectations. Crude traded as high as 76.60 today, but it's back down to the 75 level. And the USO, the ETF, United States Oil Fund, was analyzed in the previous Currency Corner video. I recommend you watch it if oil is your gig. However, tomorrow we have unemployment claims coming out, and that is a far more important release. It's going to be expected at 478,000 jobs. No one will be surprised if it's less. In fact, I would be surprised nobody would be surprised if there are more jobs shed, higher number, but actually be surprised if it's less. I'm looking for a number around 500,000. And, anything more than 478,000 is bad news. Anything less is less of bad news, but not good news. No matter what Wall Street spins it out to be, jobs are being shed. That's not good. Philly Fed Manufacturing Index is also expected to come out at 0.2. That will come out. I believe it could be better. At this point, a lot of the retailers, manufacturers are beginning to produce product for the Christmas shopping season. Believe it or not, by the time it makes it through the retail chain, by the time it gets out from the factories into the distribution channels, into inventory, to the store, to your hands, in several months. So manufacturing of the smaller products will be higher. It could be higher. I'm not saying will, but we'll look for that tomorrow. Anyways, we spent too much time on that. Moving forward, looking at the EURUSD daily chart, we see the support is found here for the temporary uptrend. I am not a bull of EURUSD. I am biased to the short side and looking for a clear break of this trend. If this is broken, this level, and it shall be broken, so only a matter of time, going down to 123. If it is not, however, at this run, at this present time, what it could do is take a rally up to 130 and form a head and shoulders, and then head on down to that same price target of 123. However, if that's not the case, we could even get a short rally to the 133 level, where it will meet resistance from the 200-day EMA. However, right now we're trading under EMA support, the bottom half of the Bollinger Band, and the trend economically and fundamentally is for a weaker euro and a stronger USD, partially on the back of a safe haven status for the US dollar. However, it is on record that China is also buying euros and diversifying their balance sheets away from the US dollar. So that could be acting counter to the trade I'm looking for. However, recently, it shows that it's right on pace, and the Fibonacci support on the greater time frames are showing bearish sentiment as well. Remember, a weaker euro means a stronger dollar. So naturally, a stronger dollar would indicate commodities are priced higher, and that should mean gold is going down. However, it is not. Gold has found great strength. It is rallying and has rallied within the last few sessions quite impressively. It's holding its ground even as the US dollar trends higher. This to me is a strong indicator of bullish sentiment. I'm going to be picking up some gold options myself for my own account and I will do so on the retracement of 118. As you see the red line here drawing us down to 118 to 118.50. I am a buyer of gold. I like gold, especially going into September, and this is traditionally the higher demand month, September through the end of the year. The reason being partially because of physical demand out of the Indian holiday Diwali, which is a several-day celebration. Much of the gold buying happens there, and Indians are large buyers of gold. They stockpile it, own the physical bullion. They've done so for many years. They will continue to do so. I urge you to read up on it. I won't go into the religious reasons or sentiment of the holiday. Just say it rallies physical demand. That is one factor. The second factor is there are a lot of dollars out there chasing safe haven status, going into the US dollar, some into the Japanese yen, but the most favored asset is gold at this point because it also helps combat or is tied to inversely inflation. So that being the case, I look to go long gold, especially with its impressive performance, given that the US dollar is appreciating in value. So, as we see, if the euro goes up, in this case, it will create an even stronger tide for gold and could push it up higher to an all-time high, which was set end of June, and I believe it was 1265.38. Either way, I believe we're going to take those highs out and reach 1,300 an ounce this year. So that's it for today, and we'll wrap it up. I wish you all luck for tomorrow's trading session, and remember to keep your eye out for that Euro USD. The break of 127.80ish, I would say. Myself, I'm going to be short with a tighter stop loss for an initial entry. And once it retests that level that we're seeing now, the current support, which will become resistance on the break, if it rallies back up to 128, I will add a much bigger position and ride it down. On the initial break, I don't like to take too much risk because it's where the stop losses are. It takes out people's trades, and we see a rally back up shortly as people's trades are sold out and bought into. So I'm going to wait for it. When it pops back up, I'm going to short it, and I'm going to brag about it to you and others tomorrow during the day. So that's it, guys. If you have any questions, always feel free to email me. I'm here to help to my best ability, and hopefully you guys have a great day out there tomorrow. Lock in some profits, get that market money, keep the risk low, profits high, live to fight another day. Adios. Have yourselves a great day. This has been George for Getting Market Money. Take care.